euro getting strong, dollar getting weak. Look what happened. Boom, volume move. Volume move. You start to see volume come in, that we have separation. Euro's going up, dollar's going down, and look what happens. Boom. Beautiful, beautiful opportunity for a trade. Same thing happens here, and then it kind of, you know, goes sideways there. Boom, move up. What about here? Things are moving together. Yellow goes up, green goes down. Boom, nice trade. What about here? Moving sideways. There we go. Boom, nice little scalp. And on we go. Look at this one. See here? Boom, nice trade. Right? See here? It just happens over and over and over again.
Have faith in your mind, have faith in your grind, invest in yourself, transform in your time. Have faith in your mind, have faith in your grind, invest in yourself, transform in your time. Trading get paid, trading get paid, trading get paid, trading get paid.
What's going on, guys? Joe here, and it's time to trade and get paid. Let's look at this indicator that is going to help you understand what is going on in the market. It is going to give you some dynamic entries, and I mean, like, this one is a big help. You know, I'm not a big indicator guy, but this indicator is going to help you to find confirmation. Now, before I get into the indicator, I want to tell you a couple of quick things. First, no indicator, none. Say it with me, none. No indicator is going to replace your skill set as a trader. You must understand what, how to read price action, market structure. You need to understand the technicals, the fundamentals. To be a successful trader, you gotta have a full skill set to understand the market. So you can't just rely on an indicator to tell you what to do. We use indicators to confirm how to trade. We use indicators to confirm where we get in, where we get out, those kind of things. It really just confirms what price action is already telling us. If you're using an indicator as a signal maker, you're wrong. You're not gonna have sustainable long-term success. It is when you use an indicator to confirm what price is already telling you. That is how you become a sustainably successful trader, all right? So let me get that out of the way. Secondly, no indicator strategy is going to just make you rich overnight. Anybody who's telling you follow this line and do this and that's all you need to do and you're gonna make millions and millions of dollars is lying to you. That's why most of you are still struggling today, because you keep listening to these YouTube guys that are telling you where to get in and where to get out based on some line or some dot flip, and it just doesn't work sustainably, okay? You have to understand technicals and fundamentals. You have to be able to identify strength and volume, and that is why most of you struggle, because you're relying on things that just are not reliable. The next thing you have to understand, volume-based trading is the best way to trade. It's not the trend. Most of us have been taught don't trade against the trend. What I'm telling you is we all trade against the trend at some level. You might be trading with the 30-minute trend, but the daily trend might be opposite, or monthly or the weekly, you know? Like everything, you know, there might be a trend forming on the 1 to 5 minute that's going up. Like at some point, there's always ebbs and flows in the market. That's not the thing. It's the strength of currency that we don't want to trade against. I do not want to trade when there is opposite direction volume in the market. I don't want to trade when the market is telling me that the other currency I'm trading against is stronger than the currency that I'm trying to buy. I want to make sure that I can identify strength in the market and ride the momentum of that strength. And that's going to bring us to our video, because today I'm showing you an indicator that will help you identify strength with being able to identify it on the charts first. So let's take a look at the charts. I'm going to show you how to identify strength, and then I'm going to show you how to confirm it. All right. So if that's going to bring you value, go ahead and hit that like button, subscribe to the channel, comment below and let me know if this video brings you value and if it helps you a lot, and let's get into it. Let's go. So we're looking at this chart here. I'm looking at AUR USD, most commonly traded currency pair, and it's pretty simple, right? So we're looking at a 30-minute chart. Let's jump to the 1 hour. All right, so we're looking at a 30-minute chart. These are big candles. Like, this is pretty simple stuff here. Watch this. Are these candles big? Yes. Man, that means that there is strength in the market. There is dollar strength or euro weakness, and there is clear volume in the market. Are these candles big? No, they're tiny, and the wicks are, you can barely see the bodies. There is no strength in the market. Why are we trading, right? If the market has no strength, don't trade. If the market has strength, trade. It's just that simple. Like what are we doing here? Okay, so, you want to trade when there's volume, and don't trade when there's no volume. It's just that simple. When you look back, volume, no volume, volume, no volume, volume, big, right? No volume. It's just that simple. So how do we identify it? Let me give you a couple of little tips. First, all right, so check it out. Love my beautiful drawings here. This is simple beginner class, right? We know that a candle opens at the low side of the body. It's a bullish candle. It closes at the top side of the body. The high point is where you have the highest point during that time period, and the low wick is the lowest point during that time period. That's pretty simple. The next thing to consider, though, is if you have a candle, how big is it in comparison to the wicks? So let's say you have a wick and you have a candle here like this. So maybe the previous candles were even smaller. So you say, ooh, there's volume coming in the market. But the thing is, look at how big that wick is in comparison to that body. We would not say that there's volume in that, because we are saying, look at how much, volatility there is. Volume and volatility don't like to coexist. If volume means that there is clear, definitive move, there's money being moved in the market. You see a candle that looks like this, and you say, look at how little those wicks are, and look how big those bodies are, all right? That's the kind of volume we want to see, clear, definitive direction. So when the market is moving, we don't want to try to get in when the market is moving like this. We want to get cleared moves. We want to get in when there's breakouts of areas, and we get like that. So we can say a stop loss, entry, take profit. We want to be able to find volume moves where we can get in and ride the momentum of a currency. All right, so that's the first thing. The second thing is the timing. You need to know your pair. If you are trading EUR USD, for an example, why are you trading it during the Asian session when there's no volume? There's no volume for EUR USD in Asia or Sydney. We want to trade that pair during London or during US. Now, if you are trading Asia and you want to trade JPY or some exotic pairs and things like that, that's up to you. I would say this: London has the most volume. US session has the second most volume. The time period between London and US Open, that like 6 a.m. to like 10 a.m. is beautiful because both markets are open. Once London starts to scale down and kind of get ready for close at 11 a.m. Eastern, you need to start thinking like, okay, this is over, because the volume from the London banks is coming out of the market. Their moves are done for the day. So you don't want to be trading when there's no volume. I would suggest 1 a.m. to 4 a.m. is very good trading. That London Open. I would say 6 a.m. to 10 a.m. great trading. 5 a.m. in there is very good trading, but many times you see kind of like where the market starts reversing and resetting, right? So there's good trading there, but I would say 1 a.m. to 4 a.m. and 6 a.m. to 10 a.m. is the best trading, all right? And that depends on what pair you're trading as well, so just know your pair. So that's the next thing. So now that you've understood that, watch this. Let me show you a couple things. In order to trade successfully, and in order to understand what's going on, if let's say I'm on the 1 hour chart, I just want to know this: what direction am I going? I'm clearly in a bullish direction. Now price is trying to break to the downside, right? So I have to ask myself, do I think this is going to drop, or do I think this is going to go up? So I have a couple of things that I'm going to ask myself. Number one, do I want to trade into structure? No, I don't want to trade into market structure. I want to trade away from market structure. So watch this. If I know that there's structure here, if I know that, look at this sideways movement, right? You can even go up to the bottom of these wicks here, since we have multiple touches. 1, 2, 3, 4. So if we know that there's structure here, Do I want to trade right now? Even though, yeah, I got a break out of that line, I don't want to trade. Look how little them candles are. I got no volume in the market, and it just doesn't look good. I don't want to do that. So what I want to do is I want to wait for price to break past my structure. So if I know there's a base right here, I had volume that brought me down, I got a base right here, and now there's no volume, but there is a breakout. I don't trust that breakout. I'm not going to trust a breakout where there's no volume. So what I'm going to need to see before I get into a trade is I need to see a break of that structure, okay? So price is in a pinch, price action. Second is market structure. I got my structure right here. I need that to be broken. So third is, can I identify any patterns? Well, I do have a base pattern here, right? Or what we call a rectangle pattern. So I have a rectangle pattern. Now I'm looking for candlestick pattern. So first is price action, second is market structure, third is chart patterns, fourth is candlestick patterns. So can I identify a candlestick pattern? Well, guess what? If price comes down here to this bottom side and rejects and starts to push back up, well, guess what I'm going to be looking for? I'm going to be looking for something like an engulfing candle, maybe something that pushes and gives me some volume, right? Now I got a big engulfing candle, and you know, there's volume to the upside. So now I know not only do I have a breakout of my structure, but I also have that breakout happening with a big volume candle. So it shows me that this move is sustainable. So I would want to see if I have an engulfing candle, let's just say, I would like to take a trade like that right there. Entry, stop loss, and then up here for structure is your take profit. So that's a nice trade, because it gives you everything that makes sense. There's a little pro tip for you. Sometimes the simple things are what tell you what's good or bad. As you enter, we're always looking for entries. When do I enter? When do I enter? But more importantly than just an entry, we need to see, does this trade make sense? If the logical place for you to get into a trade is here, and the logical place to put a stop loss is here, and the logical place to put a take profit is here, well, that just doesn't make sense. Why would I risk that much to get that much? That tells you this is probably not a sustainable trade. We see here, if we have an entry here, a stop loss here, and a take profit up here, well, that makes sense. That's a nice risk to reward trade. So that makes sense, which tells you this is potentially a good sustainable trade that I'd like to get into. So we got our candlestick pattern. Let's just say we get an engulfing, something like that. And the next thing we can do is look at indicators. And that's where some of you have come to this video for. You saw greatest indicator and came and clicked on the video. Now let's get to your content. So first thing we have is a 50 moving average. If we are butting into that moving average and butting into that moving average, at some point it's going to either break or it's going to drive down. Right? So what we don't want to do is we don't want to trade into the 50 moving average. The moving average is simple. It's just the average price over the last 50 time periods. So if price is pushing into the 50 moving average, I don't want to trade into that because it might get to average and then drop. But if price breaks past that 50 moving average, now I have something that I believe in, right? So it pushes past, same thing with my structure, and now I'm looking for a good entry. So I have the 50 moving average below with volume behind me, and I'm looking for a good buy. All right. Now, the second thing is this. Here comes the indicator. If you go here on your chart and you type in CSA, and scroll down right here where it says Currency Strength Indicator, CSA 5-Step System by IND Money, you'll see this is the one I'm talking about right here. Okay. You type that in and you put that on your chart. And this is what it's going to look like when you first put it on your chart. Okay, watch this. When you put it on your chart, it's going to come on there and it's going to look crazy. Look at all those lines. You're going to be like, what do I do with all that? That looks like a Crayola box. No, look, that indicator is not what you need. What you do is you come on here and you set the two currencies that you have in the pair you're looking at, Euro, USD. So Euro, USD. And you can uncheck everything else. Okay, well, you can leave these two lines, but uncheck the other currencies. Now see what happens is the green line represents USD, the yellow line represents Euro, and it's just each one having its own, basically imagine two RSIs, right? A strength indicator, that there's two of them going at the same time, one for each currency. So if the green line is going up, that means the dollar is getting strong. If the yellow line is going up, that means the euro is getting strong. So what we want to do is we want to find times when one is going down and one is going up, okay? So let's take a look at what happens here. If, oh, sorry, I put it down too far. If this is pushing up, and so we're looking for a buy signal, then that means is that we're thinking euro is strong, dollar is weak. So we would want to see the yellow line going up and the green line going down. Well, right now, that's not what's happening. So that's why we see this. But look back, let's start here. Green line going down, they were moving together, and then they started moving apart. Yellow line started moving up, green line started moving down. So let's put our line on that. Let's take a look, and look what happens. Yellow line moving up, green line moving down means euro getting strong, dollar getting weak. Look what happened. Boom, volume move, volume move. So there you go, there you have a little pattern. You start to see volume come in. You see right there, the indicator right here shows you that we have separation. Euro's going up, dollars going down, and look what happens. Boom, beautiful, beautiful opportunity for a trade. You could have got in right here, took that back to your trend line, took that all the way up to structure, or even if you could have took it right here, beautiful risk to reward. Look at that trade. Look how nice that is, right? That's a wonderful trade. Now, let's take a look back even further. And I know you see the one up there. I'm gonna come to that and I'm gonna show you that because there's a different way to look at that one. Same thing happens here. Look here, right? You get right here, green goes down, yellow goes up, and then it kind of, goes sideways there. Boom, move up. Look here, green goes up, yellow goes down. Euro dollar drop, Euro USD drops. What about here? Things are moving together. Yellow goes up, green goes down. Boom, nice trade. What about here? Moving sideways. There we go. We get that little crossover. Green goes down, yellow goes up. Boom, nice little scalp. Real nice. And on we go. Look at this one. See here, green goes up, yellow goes down. Boom, nice trade, right? See here? It just happens over and over and over again. Green goes down, yellow goes up. Boom, separation. That's what you're looking for, lines to separate. Green goes up, yellow goes down. Boom. Nice trade. Look at this one, yellow up, green down, boom, nice trade. Over and over again. Now, another way to look at it is the one I was showing you over here. Look at how far apart these are right now. This is way down here. Let me give you an example. Look how far apart these are, okay? You got this is way down here, and this is way up here. So the green is way down, meaning dollar is weak, and the euro is strong. Far, far apart, which means what? It's been booming. It has been booming right there, just like that. It's been up moves. Why? Because euro is strong, dollar was weak. But here's what happens. Strength starts coming back in the dollar. You start getting this, and now boom, you got a nice candle. You got a big wick at the top, and then you get a big volume candle for the dollar right here. Well, look, this pushes up, this pushes down. That tells me that there's a cycle coming. That means that the currencies are changing directions. So they're not spreading apart, they're coming back together. So what happens is when they're spreading apart, that means it was in a pinch and now it's about to go. When they're spread apart and coming back together, that means there's a reversal and there's a point coming where one is getting stronger. The one that was strong is now getting weak, and the one that was weak is now getting strong. So we can catch that reversal. Boom. And look what happens. It pushes up, this one pushes down, and we get a reversal. Really nice trade. So what I'm telling you is, if you can just use this indicator right here, the CSA strength indicator, currency strength analysis. CSA means currency strength analysis. If you can use the CSA indicator to just identify strength, not individual strength like RSI, or not strength together like RSI, but individual strength, each separate currency. What it's doing is it's allowing you to see where something is strong and where something is weak, and to confirm your trades like that. Here I go, I got a breakout. What's happening down here? The CSA indicator confirms that the breakout currency is strong. Excellent, excellent time to get into that trade. You see what I'm saying? Now you can take everything I taught you in the first portions, box up your currencies, price trap it, get down, wait for that breakout, and then confirm it on the CSA indicator to find strength. And when you see that strength, use it and ride that strength. And when you see it turn down, you know it's running out of strength, time to get out of the market, okay? So that is how we would use the CSA indicator. We just want to find where strength is, which way one currency is going versus which way the other currency is going. And if one is going up and one is going down, I want to be with the stronger currency. I want to be riding the momentum of the stronger currency. So in the Euro USD, if Euro is strong and dollar is weak, I want to buy. If dollar is strong and Euro is weak, I want to sell. And that is how we identify currency strength and how we can ride that momentum to beautiful profits. All right, guys, so I know there's a lot to consume in that video, a lot of content to think about, and I'm sure you have a ton of questions. That's good. There's a lot more to trading than just looking at an indicator. I realize that everything you need to know about trading isn't found in one video. But what I'm telling you is this is a great tool to confirm what price is already telling us. So if you have questions, comment them. Look, it's not a good or bad thing. It's not a right or wrong thing. This is just a tool we can use. And I'm offering you a tool that you can use, a free tool on TradingView that you can use to confirm trades. So if you have questions about it, comment below. Let me help answer those questions for you, and let me help guide you through these markets. If you want to become a student and see my hands-on mentorship and become, part of what we're doing, we have trade setups that are winning. Last year, 2023, we won over 90% of our trades. Full, exhaustive library of wonderful content that is helping people from beginner to advanced. Live classes every week, a dynamic trading community with people getting answers to their questions and mentorship. Go to tradinggetpaid.com, become a member today. I'm promising you this. You will come there and find it is the best course out there. I get told constantly that people have left other courses, came and tried mine, and now they're in my course and they're not going anywhere. Because what I'm doing is so much different. I'm not trying to just call signals to you. I'm not trying to show you how wonderful I am. I'm giving you mentorship and I'm giving you teaching that makes you an independent trader and takes the markets into your control. Go to tradinggetpaid.com, become a student today. Like this video, comment, subscribe, and I'll see you in the next one. Peace.